Hi, my name is Ravi. Welcome to my channel, Payment Talks. Welcome back. We have covered the PAIN.001 series completely, but we have few topics which needs more attention. One of those topics is payment identifiers. Every payment that moves through the financial system carries a story. A corporate in Spain initiates a payment. It travels through a debtor bank, an intermediary bank, a clearing system, and finally reaches a creditor bank in the Netherlands or the United States. Along that journey, multiple parties handle the same transaction, each generating their own records, their own logs, their own reconciliation entries. Now ask yourself, how do all these parties know they are talking about the same payment? The answer lies in payment identifiers, a structured set of reference fields within ISO 20022 messages, each serving a precise purpose, owned by a specific party and governed by clear rules about when it changes and when it must not. In this video, we deep dive into every payment identifier in ISO 20022 payment messages. What it is, who creates it, which messages carry it, whether it changes across the payment chain, and what happens to it in each payment scenario. By the end, you will have complete clarity on a topic that trips up even experienced payment professionals. Before going field by field, it helps to understand the three distinct perspectives that identifiers serve. Message level uniquely identifies the ISO 20022 message itself, the envelope. Batch instruction level uniquely identifies a group of transactions or a single payment instruction within a message. Transaction level uniquely identifies one individual credit transfer from origin to final destination. Each level has its own identifier, and some identifiers are designed to survive the entire journey, from the corporate who initiated it to the bank at the far end of the world. Within the ISO 20022 messages, you will find a structured family of identifiers. Before going through each one, keep this mental model. Point-to-point identifiers, created fresh at each hop. They identify the current sender's instruction to the next party. They are not designed to travel end to end. Next, end-to-end identifiers, created once and must not change no matter how many banks or systems the payment passes through. Next, scope limited identifiers, only meaningful at a specific point in the payment chain. For example, inside a PAIN.001 file or inside a clearing system. The table summarizes the full family before we go deep into each one. Let us now deep dive into each identifier. The first one is message identification. What it is? The unique reference assigned to the ISO 20022 message as a whole. The identifier for the envelope that carries all content within it. Who creates it? The sender of each message. Whether a corporate, a bank, or a payment system assigns their own message ID to every message they create. Where it appears? In the group header of all ISO payment messages, PAIN.001, PACS.008 and PACS.009. What it covers? The entire message, which may contain multiple payment batch instructions and multiple individual transactions. Key rule is the message ID is a point-to-point reference, because each bank creates a new message when forwarding a payment to the next party. The message ID changes at every hop. It is not designed to travel end-to-end across the full payment chain. Example, when ABC Manufacturing Limited sends a PAIN.001 to Barclays Bank containing payment instructions for 10 suppliers, one message ID covers that entire file. When Barclays forwards the first payment onward to Citi as a PACS.008, individual or group, it creates a brand new message ID for that message. The next identifier is payment information identification. What it is? A batch level reference that identifies a group of payment instructions within a PAIN.001 file that share the same payment characteristics such as the same debtor, same payment date or same payment method. Who creates it? The corporate or initiating party, assigned at the point of payment initiation in the PAIN.001. Where it appears? In the payment information block of PAIN.001 only. It does not appear in PACS.008 or PACS.009. What it covers? A subset of transactions within the PAIN.001, the batch or payment group. A single PAIN.001 can contain multiple payment information blocks, each with its own payment information ID. Key rule is the payment information ID is not propagated beyond the debtor agent. Once the payment leaves the debtor bank and enters the interbank chain, this identifier has no further relevance. In CBPR Plus cross-border flows, batches are not permitted. So, as per CBPR Plus usage guidelines, the same value is typically used across message ID, payment information ID and instruction ID in the PAIN.001 for a single transaction initiation. Example: ABC Manufacturing sends a PAIN.001 to Barclays Bank with two payment groups, one batch of Euro payments and one batch of USD payments. Each group carries its own payment information ID. When Barclays processes and forwards the individual payments as PACS.008 messages, neither payment information ID appears again. The next identifier is instruction identification. What it is? The reference that identifies the specific instruction a sender is sending to the next party in the chain. It operates at the transaction level. One instruction ID per transaction per hop. Who creates it? The sender of each message. The corporate assigns one in PAIN.001 and each bank assigns a new one in every PACS.008 they send. Where it appears? In the transaction level blocks of PAIN.001, PACS.008 and PACS.009. What it covers? A single transaction in a single bilateral exchange between two parties. Key rule is the instruction ID is a point-to-point reference. It changes at every hop. It identifies the instruction from the current sender to the immediate next party. The clearing system does not assign an instruction ID. Example: ABC Manufacturing sends a PAIN.001 to Barclays with instruction ID equal to I1 for a payment to a US supplier. Barclays forwards it to Citi as a PACS.008 with instruction ID I2. Barclays' own instruction to Citi. Citi then sends it to the creditor bank with instruction ID I3. The value changes at every step. Each bank's instruction to the next party is distinct. The next identifier is end-to-end identification. What it is? The corporate tracking reference for the payment. A single value assigned at the point of initiation that must travel unchanged from the debtor all the way to the final creditor. Who creates it? The corporate or debtor, assigned in the PAIN.001 at the point of initiation. Where it appears? In the transaction level blocks of PAIN.001, PACS.008 and PACS.009. It is the only identifier that appears in all three message types and remain constant across all of them. What it covers? One individual transaction tracked across the full payment journey from debtor to creditor through every bank, correspondent and clearing system. Key rule is no bank, intermediary or clearing system is permitted to alter the end-to-end ID. It passes through every hop exactly as the corporate assigned it. Of the three transaction level identifiers in PAIN.001, this is the only one created by the corporate rather than a financial institution. Example: ABC Manufacturing sends a payment to Tanaka Electronics with end-to-end ID as invoice number. The payment travels through Barclays, Citi and MUFG Tokyo. When MUFG credits Tanaka's account and sends a CAMT54 notification, end-to-end ID appears in that notification unchanged. Tanaka's ERP automatically matches the credit against invoice number set in end-to-end ID. The next identifier is transaction identification. What it is? The interbank reference for the payment transaction. The identifier that tracks the transaction as it moves across the financial institution chain. Who creates it? The first instructing bank, the debtor agent. This is a key distinction. The transaction ID is not assigned by the corporate. It enters the picture only when the payment moves into the interbank space, where it appears in the transaction level blocks of PACS.008 and PACS.009 only. It does not appear in PAIN.001. What it covers? One individual transaction across the interbank payment chain from the debtor agent onwards. Key rule is, once the debtor agent assigns the transaction ID, it is passed unchanged through every subsequent bank in the chain. Unlike message ID and instruction ID, the transaction ID does not change at each hop. Every bank that receives and forwards the PACS.008 carries the same transaction ID forward. Example: Barclays, the debtor agent, sends a PACS.008 to Citi with a transaction ID T1. Citi forwards it to MUFG Tokyo also with the transaction ID T1. MUFG delivers the payment to the creditor bank still with the transaction ID T1. The value assigned by Barclays travels unchanged through the entire interbank chain. The next identifier is UETR, Unique End-to-End Transaction Reference. What it is? A globally unique identifier formatted as UUID, that is Universally Unique Identifier, used to track cross-border payments across the SWIFT network. Introduced with SWIFT GPI, that is Global Payments Innovation, it is now mandatory for all CBPR plus cross-border transactions. Who creates it? Typically the debtor agent, the first bank in the SWIFT chain. However, with SWIFT GPI for corporates, an advanced corporate system can assign the UETR directly in the PAIN.001. If the corporate assigns a UETR, the debtor agent must honor it and forward it unchanged. If the corporate does not assign one, the debtor agent creates it and communicates it back to the corporate, where it appears in the transaction level blocks of PAIN.001, PACS.008 and PACS.009. What it covers? One transaction tracked globally across the full SWIFT correspondent banking chain and even through clearing systems in mixed flow scenarios. Key rule is, the UETR never changes once assigned. Through every correspondent bank, every intermediary and every clearing system the payment passes through. It is immutable by design. The UUID format guarantees global uniqueness without any central coordination. Example: Barclays, the debtor agent, assigns UETR to a payment from ABC Manufacturing to Tanaka Electronics. This exact value appears in every PACS.008 across the chain. Barclays to Citi, Citi to MUFG. When Tanaka's bank settles via local clearing, the UETR still travels unchanged. Any party in the chain or on the SWIFT GPI tracker can locate this payment using that single UUID. The next identifier is clearing system reference. What it is? The reference assigned by the clearing infrastructure itself when the payment enters the clearing system. It identifies the transaction within the scope of that specific clearing system, such as SEPA, Fedwire or Target2. Who creates it? The clearing infrastructure. Not a bank, not a corporate. This identifier is owned entirely by the clearing system. Where it appears? In the transaction level blocks of PACS.008 and PACS.009 only. It is absent in PAIN.001, and in pure cross-border flows where no clearing system is involved, it is absent. What it covers? One transaction within the scope of a specific clearing and settlement system. Key rule is the clearing system reference is generated once at the point the payment enters the clearing system and does not change thereafter. The clearing system communicates this reference to all participating banks. The sender bank receives it via acknowledgements or reporting messages, and the receiving bank receives it in the PACS.008 delivered by the clearing infrastructure. Example: Barclays submits a payment into the SEPA clearing system. SEPA assigns clearing system reference equal to C1 to the transaction. Barclays receives C1 in the acknowledgement back from SEPA. The creditor bank receives the PACS.008 from SEPA carrying clearing system reference is equal to C1. Both banks record C1 internally, and when the Nostro CAMT 53 statement arrives, Barclays uses C1 to match the settled entry against their internal payment record. The best way to understand payment identifiers is to trace them through actual payment scenarios. We will discuss three flows: domestic, cross-border and mixed, showing exactly which identifiers are present and what happens to each at every step. The first flow is the domestic payment flow. Scenario: a corporate in Spain initiates a payment to a creditor in the Netherlands. The payment moves from corporate to debtor bank via clearing system to creditor bank. Now let us understand what happens to each ID. Message ID is created fresh at each hop. The clearing system does not create a new message ID as it is infrastructure, not a bank. Payment info ID is batch relevant at the corporate level only. It does not flow beyond the debtor bank. Instruction ID changes at each bank hop. The clearing system does not assign an instruction ID. End-to-end ID remains unchanged from corporate through to creditor bank. Transaction ID T1 is assigned by the debtor bank and stays unchanged, including through the clearing system. Clearing system reference C1 is generated when the payment enters the clearing system and is carried through to the creditor bank in the outgoing PACS.008. UETR is not shown here as this is an exclusive domestic flow. UETR is primarily a cross-border tracking identifier. The next flow is cross-border CBPR plus flow. Scenario: a corporate in Spain initiates a payment to a creditor in the United States. The payment moves from corporate to debtor bank via intermediary bank to creditor bank. No domestic clearing system is involved. This is pure SWIFT correspondent banking. Now let us understand what happens to each ID. Message ID is new at every hop M1, M2, M3, M4. Payment information ID exists in the PAIN.001 at the corporate level, but it's not propagated into the interbank chain. Instruction ID changes at every hop I1, I2, I3, I4. Each bank's instruction to the next party. End-to-end ID E1 is unchanged across all four parties. Transaction ID is assigned by the debtor bank first instruction bank as T1 and passes through every subsequent bank unchanged. UETR UID is assigned by the corporate in this scenario with GPI for corporates or by the debtor bank, and it travels unchanged through all four parties. No clearing system reference. There is no clearing system reference in this pure cross-border flow. The final flow is a mixed flow having cross-border plus domestic clearing. Scenario: a corporate initiates a cross-border payment. The debtor bank sends it to a correspondent bank in the creditors market. That correspondent then settles to the creditor bank via the local clearing system in that market. Now let us understand what happens to each ID. Message ID and instruction ID change at every bank hop as always. End-to-end ID, transaction ID and UTR all remain constant from their point of assignment through to the creditor bank, even across the clearing system. Clearing system reference is generated when the payment enters local clearing and is carried through to the creditor bank. This flow illustrates the critical design principle. End-to-end identifiers like end-to-end ID and transaction ID and UTR survive infrastructure boundaries. They pass through clearing systems, correspondent banks and payment scheme gateways without change. Let us now look at some of the common misconceptions on the IDs. The transaction ID changes at every hop like the instruction ID. This is incorrect. The transaction ID is assigned by the first instruction bank, the debtor agent, and remains unchanged through the entire interbank chain. Only the message ID and instruction ID are point-to-point references that change at each hop. Next, the UTR is always assigned by the debtor agent. Usually, yes, but with Swift GPI for corporates, an advanced corporate system can assign the UTR in the PAIN.001. When this happens, the debtor agent must honor and forward that same UTR. If the corporate does not assign one, the debtor agent creates it. Next, the end-to-end ID and the UTR serve the same purpose. They do not. The end-to-end ID is a business reference created by the corporate to reconcile the payment against an invoice or order. It serves the corporate treasury or ERP system. The UTR is a tracking reference created within the banking network to trace a cross-border payment across SWIFT. Different ownership, different scope, different audience. Next, the payment information ID travels throughout the payment chain. It does not. The payment information ID is scoped to the PAIN.001 file and the relationship between the corporate and the debtor bank. It has no existence beyond the debtor agent. Next, the clearing system reference is only relevant for settlement. The clearing system is also critical for payment operations and reconciliations. Both the sending bank and the receiving bank in a clearing settled payment receive and use the clearing system reference. The sending bank via acknowledgement or reporting messages. The receiving bank in the PACS.008 it receives from the clearing infrastructure. With this, we come to the end of this video. Hope you understand the payment identifiers of ISO like never before. Next, we cover the detailed field topics of payment type info and amount exchange rate sections in detail before we move to the most important message of PACS.008. Until then, keep smiling and keep learning. Thanks for watching this video. If you like this video, please like, subscribe and share for more such interesting topics on payments.